Brian. Thank you very much for inviting me back here again to the MIF. I can't be miffed with the MIF for having a minute I think it's 10 minutes to describe the last roughly 10 years of my life. I have a minute a year. But it's been an interesting journey. We just published our feasibility study a few days before Christmas, really. And we'll file that shortly as a 43-101 report. And I'm delighted to say we just submitted our full EIS for this project. It was August of 2010 that we put, it was a one-hole program really, to a proof of concept on some claims we'd staked in Puebla. And we pulled about 300 meters at 2.5 grams, if I remember correctly, in a vein zone, a very high-grade vein zone in limestone. And that was a pretty good time to make a discovery. Market was at its peak, and we put 4 drills on the project. And of course, by December of 2011, the market was starting to slip away. So we spent the last number of years doing all the things that go into permitting a mine. Ultimately, obviously, all the front-end exploration, resource definition, which is the exciting part of discovery process, but also the riskiest part, where you hope it all holds together. And of course, we're talking to you today because it did. But all the long lead time items that you need to permit a mine, the social work, the environmental work, et cetera. So I'm standing here telling you about the results of the feasibility study, but we hope in a year's time we'll be shovel ready on this project and breaking ground. Yeah, so just a quick little summary here of what it is. We've got a reserve of about 2.5 million ounces gold equivalent. This is an interesting deposit, not a little bit atypical even for Mexico. It's half gold, half silver per value per ton. And that makes it quite interesting. I think it's open pittable. One key aspect of the project and a good aspect of a bad market going through all these steps that I described to you is that there's opportunities out there. We managed to find a mill that's quite well suited to our project that had been used for 3 weeks, but had been part of a $250 million build that unfortunately wasn't successful. And so we were able to secure that for $6.5 million. And we spent $2 million last summer getting it all ready to move. It's in Nome, Alaska. So it's demonstrably reduced our capital costs for this. So a little bit of an advantage perhaps to doing these things in a bad market. The key metrics here are that at 12.75 and 17 silver, our base case, we have a 42% IRR. And we have under 200 million capex here. So it's summary is in a great jurisdiction, open pittable deposit. And as I'll show you shortly, there's some other metrics that are pretty important. We've been around a long time. This company came public in 1986, and my father's the chairman. We're both geological engineers, and we've worked together, well, pretty much that whole time. I grew up as his field assistant. And we've got institutional support, as you might expect. That's our share price. And through all those studies, it's not very sexy compared to exploration and the early stages of discovery. But that's where we are today. So just getting to the deposit itself, first 6 years, averaging in terms of gold equivalent for those 6 years, 200,000 ounces a year. We're over 2 grams a ton average grade in gold terms. So you have to look at this in both terms. You have to look at it in silver as well, because as I mentioned, its value per ton is almost the metal ratio. So it's about half gold, half silver per ton. And so, we're looking at, for those 6 years, nearly 13 million ounces a year. This is a nice gold producer by any metric, I think. But from a silver perspective, which is reasonable to look at it that way, as I said, it's a screamer. We're looking at life of mine over 100 million ounces of silver and nearly 2 million ounces of gold. We're located in an area which is unfamiliar to people, and that this project spawned out of our regional exploration program, which I sat in a helicopter for a bunch of years landing on everything I could find in this eastern part of the country to understand it, and wound up doing a bunch of advanced research on it. And in our sister companies, we've made some further discoveries that were essentially spin-outs from this company. So this is a region that we pioneered and are first mover in. We're in an industrial state called Puebla. It's east of Mexico City. We're about 20 kilometers from that industrial park where Kimberly-Clark is making God knows what, toilet paper or something. We're about an hour and a half drive from the largest Volkswagen plant outside of Germany. And so this is an industrial state, the largest open pit, industrial open pit is in the state. It's not a metal mining state recently, but certainly it was historically. So we hope to lead the effort of getting that back on the map. Cemex is the largest cement producer in North America, and their big quarry is about 80 kilometers from us. So it's fairly well known for its development. This is the Rock Creek Mill that we purchased. It's in Nome, Alaska, and I think I went through that, but it's ideally suited for our startup scenario. And this is some of the work we did last summer as part of the move. Getting it prepared. The ocean freezes over in Nome from October through to May usually, and so we got the mill prepared for the ultimate move to Mexico to avoid risk in having to spill over into 2 summers. So we removed that risk by getting it ready to move. This is just a little bit of a quick summary of the mine schedule here, and we have in the base case plan an expansion of the plant that we do out of cash flow in year 5, but I've certainly looked at the project without that, and it's very similar. So right now we have essentially, we've got a 3.5 million ounce resource, which I'll speak to shortly. But it's upfront loaded in terms of grade. You can see the grades in the first few years, 2.5 grams, 2.8, 2.3, 2.6. So that's why we have such quick payback and the high IRR. You know, as every other project in the world is, we're leveraged to the price of gold. But we're also protected on the downside. The base case is there with the 42% IRR and the 310 million NPV, but you can see where we are. We still have at 11.25 and 14 silver, we're still a pretty robust project. And of course, you'd have a different pit in that scenario as well. I mentioned the resource. The reserve grades include a lot of internal dilution. It's call it a 1.5 gram reserve, half gold, half silver. But as I mentioned, this is an anastomosing, meaning branching and reconnecting zone of veining, and it encapsulates a lot of limestone blocks that are random within the veins that we can't model out. So we've had to put in this internal dilution, but it is comprised of high-grade veins that are 20 meters wide and up to 20 meters wide in many cases. So in terms of exploration upside, this is a big thing I want to mention. All the drilling is in this area right here, but we've got big alteration zones. We made a new discovery about over 1 kilometer with no inter drilling along that strike length. So we've had to curtail our exploration activities as we focus on the resource and the feasibility study and all the other aspects. Stakeholder engagement, we've done something unusual. This isn't an area that's known for mining, as I mentioned before. We've brought 500 people to active operating mines on bus tours to make sure that they're fully appraised of what's coming as a stakeholder and are on board with it, and we think they are. We had an 800-person community meeting just December where we outline our plans for permitting and our updated feasibility study, and it was attended by the new government's Minister of Mines, which we're very pleased. And we're happy to demonstrate the support we have with our community. We have a low-impact mine plan here as we've laid out. We recognize we're limestone. We have low ARD potential. In fact, our tailings are non-acid generating. So this is quite a benign mine plan. And Yeah, I think I've got 30 seconds left to describe the last year of my life, I guess. And what I'll say is that we've just submitted our full EIS. Permitting in Mexico is usually about a 6-month process for the EIS, and then there's other permits. And typically, most mines that have been successfully permitted in the last number of years are about 12 months in total. So as I say, we've started our project financing discussions, and next year will prove to be pretty interesting for us. Thanks again for attending, and I'm out there if you want to pepper me with any questions.